Can you day trade in a TFSA or an RRSP? How often can you buy and sell the same stock before it's considered day trading? And when might the Canada Revenue Agency come looking for a cut of your capital gains? In this video, I'm going to answer all these questions and more. Now, bottom line up front, if you just came for the conclusion, you cannot day trade in a tax-free savings account. The Canada Revenue Agency, or CRA for short, considers the profits from day trading to be business income and will tax it as such. With RRSPs though, you can day trade qualified investments no problem. And the reason being that the CRA is going to get their cut eventually because withdrawals from these accounts are taxable. Let's get into some more details though, starting with the tax-free savings account, or TFSA for short. Like I already said, you cannot day trade in a TFSA, and if you do, the CRA might come knocking on your door asking for a cut of those capital gains. And we know from CRA reports that they actually regularly conduct audits of people's tax-free savings accounts, and they have recovered millions of dollars in unpaid taxes as a result of these audits. So you really do need to be careful and make sure that the type of trading that you're doing does not qualify as day trading. The tough part is though that the CRA does not tell us how often we're allowed to trade a particular stock, bond, ETF, or other type of qualified investment before it's considered day trading. Obviously, if you buy and sell the same stock on a daily basis, that's considered day trading, and that's no bueno. But there are plenty of reports from experts that say if you trade the same stock on a monthly basis, that should be okay. Now, my question is, what about everything that falls in between? And this is where it's a bit of a gray area, but there are a list of criteria that the CRA uses to determine if an account holder is actually day trading in a tax-free savings account. And those criteria are the frequency of the transactions, the duration of the holdings, the intention to acquire securities for resale at a profit. Now, this one's a bit confusing because it's a given that we invest in securities hoping that we're going to be able to sell them for a profit at some point down the line. The fourth criteria is the nature and the quantity of the securities that somebody's investing in, and I'm going to come back to this in a second. And the fifth and final criteria is the amount of time spent on the activity. So essentially, they're considering a day trader to be someone that actively makes a profit, or at least attempts to make a profit, from trading in certain securities. Now, I don't know how they would audit this because you're not exactly recording the time that you spend researching and doing due diligence and examining technical charts of a stock before you buy and sell it, but that's one of their criteria. Taken together, these 5 criteria are what the CRA uses to determine if an account holder is actually day trading in their TFSA. And it's a little bit subjective, and I think there's room for interpretation in a lot of these. But I want to come back to the 4th criteria, which talks about the quantity of the securities that somebody's investing in. And from all of the reporting that I've seen, the CRA is unlikely to come after somebody and ask for an audit if you're dealing in small amounts. They're really looking for people that have accounts that are worth hundreds of thousands or millions of dollars. And unless you're making serious money trading in a TFSA, it makes sense that the CRA wouldn't go after you trying to pick up a couple of pennies. It's not going to have a good cost-benefit analysis for them to audit somebody and then go after them to try and collect tax revenues if the capital gains aren't actually worth collecting. But you never know what the CRA is going to do. And so if you're thinking about investing or trading in a tax-free savings account, then it's definitely important to keep these 5 criteria in mind and make sure that you're not breaking any of these rules. Let's move on now to registered retirement saving plans, or RRSPs. Now, investing or trading in an RRSP is a different story, and that's because the money that you put into an RRSP is pre-tax and tax deductible. And so that means when you're withdrawing money from the account, it's going to be taxed at that point. And that is why most day trading activities will probably be okay in an RRSP. And I say probably because there's a couple of caveats, which I'm gonna get to in a second. The biggest thing to be aware of is that when you're investing in an RRSP, you need to be investing in what are considered qualified investments. And there's a whole list of different types of securities and other investments that fall in this category. And that list includes stocks, bonds, ETFs, warrants, options, GICs, trusts, etc. I'll throw a link in the description box that contains a list of what are considered qualified investments by the CRA. But as long as you're investing in these types of investments, then you should be okay. Things that aren't considered qualified investments might include penny stocks that are trading on over-the-counter markets, for example. And so that is something to be aware of, and you probably want to stay away from those if you want to be investing or trading in a registered account like an RRSP. And like I said, the reason why day trading in an RRSP is considered okay is that the government knows it's going to get its cut once the money is withdrawn. So any of the capital gains or dividends or interest payments that you receive from those investments in an RRSP are going to be taxed once you take the money out of the account. In conclusion, it's generally okay to day trade in an RRSP, but it's definitely a no-go in a tax-free savings account. That said, there are a lot of nuanced gray areas here, and so if you have any questions, I recommend contacting a financial advisor because I'm not one of those, and this video is just for entertainment or pseudo-educational purposes. Consider this though, studies have shown that over 95% of day traders actually lose money. And so when you think about that, I'm not sure why so many people are worried about this and are asking these kinds of questions. If you're day trading and you're consistently earning profits and you're consistently earning enough profits to have to deal with the Canada Revenue Agency, then really you're in the top 5 or maybe even the top 1%. And I think that's a pretty good problem to have. That's all for today. If you enjoyed this video and you want to see more content about investing, personal finance, as well as entrepreneurship, please don't forget to subscribe to the channel, leave a like on the video, and I will see you next time.